OMV presents the results of the first half year of 2019. Let's start with the latest highlights.
The highlight for me in the first half of this year was June the 7th in St. Petersburg. I was very privileged to attend the St. Petersburg International Economic Forum, and there, in front of representatives of the Russian and Austrian government, OMV and Gazprom signed an amendment to the basic sale agreement for Achimov 4 and 5. This foresees a price of 905 million euros in exchange for 24.98% in the Achimov 4 and 5 development project. Achimov is part of the Urengoy gas field. This is the biggest gas and condensate field in Russia, one of the largest in the world. By comparison, it's 12,000 square kilometers, which is the equivalent of Upper Austria. It's a very important and exciting milestone in delivering OMV's strategy for 2025. It will add 600 million barrels of oil equivalent to our reserves and significantly enhance our production. It's also a stepping stone in growing the Russia hub in Russia to make it one of 5 core regions within OMV.
OMV's future success is also depending on its digital fitness. With our affinity to technology in the past and in the future, it is part of OMV's DNA. The digital initiatives are driven from business in dedicated initiatives like Upstream, DigitUp, or in Downstream, Digital Motion and Finance 4.0 Incorporate. The initiatives range from finance process automation in finance to digital turnaround in the refineries and applying artificial intelligence in the gas business. In upstream business, thousands of automated wells are part of the real-time digital oil field. The digital rig of the future will make the drilling and planning more efficient through automation. This ambitious plan has been developed as a team and fully supported by top management. Therefore, we invest more than 500 million euros in dedicated initiatives. The success of our digital transformation are our people. Many things are new and different. That's why we have to develop an environment for change and to foster innovation. Also, agile and new ways of working are at the core of our change. In a digital world, more than ever, our people are at the heart of our business.
My personal highlight in the first half of 2019 was undoubtedly the landmark partnership with ADNOC, the Abu Dhabi National Oil Company. In a fiercely competitive process, we succeeded to acquire a 15% share in ADNOC refining and a 15% share in a future trading joint venture. This is a remarkable achievement for a number of reasons. It is the largest financial investment in the history of OMV measured by enterprise value. We immediately increased our refining capacity by 40% and our petrochemicals capacity by 10%. And finally, with this acquisition that will be value accretive to our earnings per share from the first year onwards, we establish a new core region, a fully integrated value chain from upstream production to refining, trading and petrochemicals. There's only one other country in the world where we achieve this, at our home base in Austria. ADNOC Refining's main assets are at the heart of the Ruwais megasite, the 4th largest integrated refinery site in the world. The total capacity amounts to 922,000 barrels per day, with high-quality assets that ensure immediate returns. As a closing remark, with our decisive move to Abu Dhabi, we took a big step towards implementing our strategy 2025.
Now to the figures in detail. OMV had a strong performance in the first half of 2019. OMV generated a Clean CCS operating result of 1.8 billion euros. This was driven by a higher result in both upstream and downstream. The upstream result was positively influenced both by a higher realized oil price and increased sales volumes, mainly driven by higher production. Oil and gas production rose overall to 482,000 barrels per day, mainly attributable to New Zealand, Abu Dhabi, Norway and Malaysia. In addition, we were able to reduce production costs to $6.9 per barrel. The downstream result improved thanks to a solid performance by the fuels business and a higher utilization rate. We achieved this improved result despite a significantly lower refining margin. In the first half of the year, the OMV Supervisory Board approved a new organizational structure for the OMV Group with the split of the downstream business into two divisions. Refining and petrochemical operations, headed by new Executive Board member Thomas Gangl, and marketing and trading, headed by Rainer Siele, on an interim basis until a permanent appointment is made. This positions OMV's organization consistently along the value chain and ensures its preparedness for tackling strategic challenges in the future.